McDonald's has entered a Minecraft movie universe, and Grimace, Birdie, and Hamburglar just spawned as new collectibles in the overworld. Now for a limited time, you can get one of 6 McDonald's collectibles when you order a Minecraft movie meal. Ooh. With your choice of Big Mac or 10-piece chicken McNuggets with spicy nether flame sauce. Available now in a biome near you. Oh, and at your local McDonald's. I participate in McDonald's for a limited time. A Minecraft movie only in theaters.
Everyone deserves a chance in the driver's seat. For GM and Revolt, that means leading the way on the road to an all-electric future and envisioning a world with 0 crashes, 0 tailpipe emissions, and 0 congestion. GM's committed to making EVs accessible for everybody. That means you too. So what are you waiting for? GM's got the keys. You grab the wheel. Learn more about an all-electric future and the 000 initiative at gm.com. GM, everybody in.
What's up, y'all? It's your boy David with Black Wealth Renaissance, and I'm here today to tell you guys about Anchor. If you haven't heard of Anchor, it's the best place to make a podcast. Anchor is a free app that has creation tools that allow you to record and edit your podcast straight from your phone. Anchor also distributes your podcast across all major platforms, including Apple Podcasts, Spotify, and many others. You can also make money on your podcast with Anchor with no minimum listenership. Anchor is everything you need to make a podcast in one place. So if you're looking to get started on your own podcast, download the free Anchor app or go to anchor.fm.
There's no purpose in teaching anybody who don't really want to learn, who really don't want to get to it. Everybody want to play entrepreneur. They don't want the sacrifice that come with this shit. Truly.
Late nights, early mornings.
You're going to lose friends, lose girlfriends, family going to call you crazy, not going to believe in you, then you make it, and then everybody going to be like, I'm proud of you, let me get some money.
What I've realized that wealthy people understand, and people in general, it's the small concepts that you can apply to get wealthy. You don't gotta be super smart and gotta know all the intricacies of real estate or taxes or e-commerce or whatever, trucking, whatever it is.
It's good if you want to be rich in that business, but you don't need to know that.
You don't need to know everything. You just need to know small, basic concepts. And one of the smallest basic concepts that anybody can understand is get money, buy income. Get money, buy more money.
I woke up feeling wealthy today. My bank account might not agree, but hey, that shit on the way. Me and my niggas laying brick on top of brick till we straight. If you the type that play the victim, you can't come in my space. You know this game ain't for the weak, it's hard to carry this weight. I keep my balance through the ups and downs, I'm never gonna break. You feel the purpose in my spirit when you look in my face. Cause this ain't a second I can waste, I'm putting food on plate.
What's good, wealthy people? You are now tapped in, tuned into the Black Wealth Renaissance podcast. The often imitated, never duplicated, highly successful, and the place you want to be, man. I ain't gonna lie, man. Black Wealth Renaissance been going crazy. I'm one of your hosts, David Ballard. I'm here with my brothers, man. How y'all boys doing?
What up, y'all? It's your boy, Jalen, man. Another quarter of the Black Wealth Renaissance podcast. Feeling good, feeling great, dog. In this dope-ass setup. Got the Nipsey, got the Kobe behind us, so I'm feeling goalie and godly, dog.
This man here. What's good? It's your boy Jay Spiller, man. Checking in. Hey, man, I'm just happy, man. Feeling good, feeling great. Ready to get into this podcast. Loving all this dope art. You know I got to rock with the nip, all the racks in the middle. I got the tat on the back. You feel me? So I'm ready to get into this episode, though. We've been chopping it up with a real dope guest. We've been definitely chopping it up, you know what I'm saying, giving us a great background and a great story as far as where he is now. Teaching me some lessons and stuff on how to appreciate some things in the middle. You know what I'm saying? Hey, I appreciate this episode, and we ain't even all the way done with it yet. So let's get it rolling.
Let's get started. As my brother Jared was saying, man, we got a great guest on today. None other than Mr. TJ Woodard, man. One half of the Impact Investments team out here impacting, I think he said, over 8,500 people so far he's helped learn how to trade and make money in the stock market. TJ, how are you doing, brother?
Man, I'm doing well, brother. Doing well, man. I appreciate y'all brothers for letting me come on y'all platform and just chop it up with y'all. Hopefully give out some good game to the people watching y'all podcast. And I'm just ready to get into it, yo.
Hey, man, again, bro, appreciate you coming out to Dallas, man. Making your way out here from North Carolina, coming out here and enjoying the city. And, yeah, really, thank you, bro. This means a lot to us. Because, like, again, like we was just talking about, bro, shit like this is so important. Like, what we talk about and what we do is so important for young dudes to understand. Definitely. So, like, really just, man, let's just hop into it, bro. So, TJ, to start the episode off, I'm going to ask you to introduce yourself to our audience in your own words, man.
Yeah, most definitely, man. So, TJ Woodard, I'm 27. I'm a graduate of North Carolina A&T State University with a degree in economics. I'm from Greensboro, North Carolina, born and raised. I currently live in Charlotte, North Carolina. And I'm probably one of the most transparent people that you'll ever meet. You know, I think, you know, it's important that you share your story, good, bad, and different, and you allow people to kind of get the growth out of your history. So that's what I'm looking forward to kind of doing today and kind of getting into with y'all boys.
I appreciate that, bro. So I do got my first question that I got for you. I just want to know, like, what was typical life like for you growing up, you know, before you even got to college?
Yeah, for sure. So, yeah, typical life for a brother like me in Greensboro. Grew up with my mom and dad, two-parent household in the beginning. They ended up getting divorced and, you know, kind of doing the back and forth type thing, right? Which I think was really integral to my development, because my mom's was doing really well for herself, kind of had a certain type of lifestyle, and my dad was, you know, he was trying to make it, right? So it kind of showed me two sides of the same coin, and it made me versatile, right? And it showed me to say, okay, like, yeah, like you can appreciate having some extra goldfish in your snacks when you go to school with your moms, but when you with pops, like, it might not be no extra goldfish in the bag, man. But it showed me just to appreciate, like, the now. So, you know, growing up, I went to an all-black high school, Dudley High School in Greensboro, North Carolina. Actually, the first historically black high school in North Carolina. And I was a typical high school student, man. Enjoy hanging out with friends. I was in the band, so, but like not the regular like marching band, like HBCU swag marching band. So like,
me too.
we used to get down. So I played baritone and saxophone.
I played baritone.
You played baritone, yeah. So like that was that band was like a family to me. And then I also played golf. I was a golfer in high school, man. I actually picked up golf in 6th grade. Just kind of, my dad used to always watch Tiger play, and I couldn't watch the game, but he took me out there one day and said, like, just swing the club, and I actually had like a natural swing to it. So I played golf throughout all 4 years of all 4 years of high school, and yeah, I was actually afforded some opportunities to play collegiate D2. I decided not to take that route, but yeah, so that was kind of my life, kind of coming up.
Yeah. That's pretty dope too, though, because like I don't know a lot of high schools that got golfing programs like that.
Yeah, man. So in our high school, since I played in middle school, like it was really important that when I came to high school, I'm like, look, like I want to play. Like we need to make this happen. So I was a student that like I brought a lot of things to the school. So I was also doing science fairs in high school. So like I was bringing a lot of attention. So I'm like, look, I'm doing this for y'all. Y'all grease my palm too. Like I'm trying to get a golf team. So they basically told me, get some of your people together. If you can get a team, like we'll sponsor it. So I went to the homie and said, hey, look, bro, I don't care if you want to play or not. I want to play. Come hop on the team. And eventually, like, you know, they actually got pretty good. And in my senior year, like we tried to make a run for it. We didn't make the playoffs, but we tried, and I think that's all that really mattered at the end of the day.
Man, that's dope, dog. That's really legit.
So TJ, bro, I kind of want to ask now, like, what were you doing before? Because now you're a full-time stockbroker, right? What were you doing before that?
Oh, man. So, let's see. I've always been a hustler, right? So, in high school, whether it was selling candy, selling sodas, like, I was always trying to sell something and make a little bit of money. But kind of fast forward, in college, I worked a lot of different odd jobs, like, you know, delivery, food service, waiter, like, if it was a hard labor, I did it, you know, painting, like, if cutting grass, whatever. If I can make some money, I would do that. And then, you know, I kind of got to the point where a lot of brothers get to where, like, that just wasn't enough money.
I'm over here busting my ass, and I'm
not
looking
enough.
in my pockets, and it's like,
it's just not enough money. The math ain't math. And so I tried some different things, not everything, above board, and I learned a lot of lessons through it. And to be honest with you, some of those lessons that I learned through doing some of those things, I still implement in my life today. Because I tell people, you never look down on the person from the streets or that's living a street life, because the lessons that are there, put in a different environment, that you be surprised what they could do. So yeah, I let's just call me a jack of all trades. I did a little bit of everything, man.
So you just touched on some of those lessons you learned, though. What was some of the important lessons that you still implement into your life today?
I think one of the biggest things is know when you're in survival mode.
McDonald's has entered a Minecraft movie universe, and Grimace, Birdie, and Hamburglar just spawned as new collectibles in the overworld. Now for a limited time, you can get one of 6 McDonald's collectibles when you order a Minecraft movie meal. With your choice of Big Mac or 10-piece chicken McNuggets with spicy nether flame sauce. Available now in a biome near you. Oh, and at your local McDonald's. I participate in McDonald's for a limited time. A Minecraft movie only in theaters.
Know when you're in survival mode. And what I mean by that is when your body or your mindset kicks out of like everyday living and you kick into survival mode, you got to realize that your decision making is going to be rash. It's going to be impulsive. And if you can't identify that you're making impulsive and rash decisions quickly, typically that's a slippery slope. You'll find yourself making bad decision after bad decision after bad decision, and then you realize like, man, like, how did I get here? So I think that's one of the major lessons that I use now is like, TJ, like, are you kind of in survival mode right now? And that might not just mean like financially, that might just mean like emotionally. Maybe I'm trying to protect myself mentally, maybe I'm trying to protect myself, but knowing when I'm kind of getting in that survival mode and then knowing how to get myself back out, right? Whether that's tapping in with my therapist or talking to my girl or talking to my homeboys, like, hey, like, I'm kind of struggling with X, Y, and Z. Like, have y'all dealt with this? Like, what are some things that y'all do to kind of, get yourself back? Because I know I operate the best when I'm not in survival mode. Some people thrive off of that. Personally, I don't. I operate when everything is a little bit more copacetic. So that's probably one of the biggest lessons that I learned.
My brother-in-law died suddenly, and now my sister and her kids have to sell their home. That's why I told my husband we could not put off getting life insurance any longer. An agent offered us a 10-year, $500,000 policy for nearly $50 a month. Then we called SelectQuote. SelectQuote found us identical coverage for only $19 a month, a savings of $369 a year.
Whether you need a $500,000 policy or a $5 million policy, SelectQuote could save you more than 50% on term life insurance.
For your free quote, go to SelectQuote.com. SelectQuote.com. That's SelectQuote.com.
SelectQuote. We shop. You save. Full details on example policies at SelectQuote.com/commercials.
It's just kind of identifying when I'm in survival mode.
That's good, bro.
That's real heavy.
Like, that's so major because I don't think we think about it very often. That like how bad your decision making is. I went back to some scientific shit. If you in fight or flight, you not thinking shit through.
No.
You like, I need to react now.
Right now.
I need to react right now. And if I don't react right now, I'm gonna miss everything. And it's like that's not always the reality. You might be living in survival mode in a situation where you really could be relaxed and, like you said, you taking this. Oh, I need to do it now, and now you done fucked yourself over.
You done blew the bread. You done blew the bread, and it doesn't matter in any aspect of life. Like you can kick into survival mode. Like I see it a lot, especially like in the market, right? Like I tell people, don't play with your rent money because that automatically puts you in survival mode. You automatically looking for that play that's gonna take you 5x, 10x because you playing with money that you shouldn't even be playing with. And you trying to make something out of nothing. And like you just said, you didn't have to take that risk. You could have just paid your rent, waited till you had a little bit of extra bread, and then try to trade with what you had. But you trying to make something, you trying to make the situation harder than what it has to be, and more than likely you probably gonna make a bad decision.
That's fair.
So how did you get into trading?
So, yeah, back in 2016, 2017, I'm pretty sure everybody watching the podcast can remember that iMarkets Live Forex. It was popping. And, yeah, man.
Both of them. You feel me? Yeah. you know they IM Academy now.
Yeah. Hey, man, they done have more rebrands than a couple, man. Because don't let me not knock it, right? So like there are some people in those programs that really are legit, that really kind of building great communities. But when I got into it, I had some people approach me and say, hey, like, I was an economics major in school. So they're like, hey, brother, like, you do real good in class. Like, you kind of know this stuff. Like, you can apply this to really, like, make money right now. So I'm like, okay, so, like, what y'all talking about? So they sent me to the little orientation, right? They like, yeah, like, you pay this $199. We're going to teach you how to trade. And then you bring 2 other people. You ain't got to pay the $199 no more. So I'm like, I'm doing the math. I'm like, so I got to pay y'all, and then I got to bring some people in. Or I could just figure out how to learn this skill on my own because like y'all had to learn it from somewhere. So then I started to realize that like the Forex market, which I already knew, was like an independent entity. Like I could get access to this as long as I had a broker. So once I kind of figured out how to set up the brokerage account, like I was like, I'd rather just kind of figure this out.
Take the $199 I was gonna give y'all and trade with it.
Trade with it and try to figure out my own thing. So that's kind of what I did. I took 2016, 2017 just to kind of play with it, play with the money, try to figure it out. Little small lot sizes, not trying to do too much. And, I think that really helped me because I think a lot of times when people do get in those type of programs, they're so focused on trying to get that affiliate money in the beginning. They were focused on trying to bring people in that they're not learning the actual skill. And then eventually they making so much money off the affiliate. They're like, why do I even need to, really
learn how to trade?
I can just keep bringing people in.
And I hate that so much because now you just straight cap.
Yeah, and the thing is,
I don't know nothing about trading.
I would probably say 60 to 70% of a lot of individuals you come across in that space are not good traders. They're just cap, And because my thing is, if I ask you about the market, and you telling me that, we have this resource and we got that resource, and you can't tell me because you've had access to these resources too about the market, then I realize that this is not where I want to be. And this is why I kind of got affiliated with a group like Impact Investments, because what I realized is we're not running no affiliate scheme. Like you can bring as many people as you want to Impact. Like that's not what's getting you paid. What's getting you paid is the fact that you are learning a skill, and we're going to teach you that skill, and we're going to keep pounding that skill in every single day until it becomes natural to you. And I think that's the really important thing. Do you want to learn? Because I think IML is great if you want to learn how to be an affiliate marketer. But if you want to be a trader, I don't know if that's the best space for you. They have the tools, but you have to kind of identify yourself. Like, what type of learner am I? Am I a person that can take resources on my own and develop my ideas, or do I need help? If you do need help, then you probably need to be around people that are actually helping you get there.
So I kind of want to, you talk about you're constantly in the market, you're constantly teaching people. One of the biggest things that I see with like Impact, y'all got a lot of winning plays that come out. Like, how do y'all constantly find these positions and constantly find, okay, this is going to do well today, or, this might be a good setup? How do y'all constantly find these things?
Yeah, so there's a couple different things that we do. I think one of the biggest things that we've been utilizing a lot recently is a app and website called Capital Flow. So my partner JT, he's actually developed a website called Capital Flow that looks at option order flow. And what option order flow is if you think about it, all the major institutions, all the big players, they're working on the same exchanges that we are. So that data is coming in and it's coming out. So what Capital Flow does is it's showing you the data as it's coming in. So we're seeing the $1 million plays coming in. We're seeing the big money pouring in. If I'm seeing somebody pouring in $5-10 million in the first 5 minutes of the market, I might not have $5 million, but I'm riding their coattails. I'm following that smart money. So that's one thing that we utilize is option flow services and Capital Flow. Another thing that I personally do is I kind of utilize my knowledge of economics, and I look at the higher bird's view of where the market's at, right? Like, what are, like, from an economic standpoint, like, what makes sense, right? So, like, For instance, like this year, like even before the Ukraine situation, like we saw oil prices like starting to tick up, right? And like oil prices naturally start to tick up like as demand and economic recovery happens, right? Because if you're moving around, your economy is growing, like you're going to need more oil. So that's going to make the producers of oil raise the price a little bit. So like I kind of like in Impact, we was playing oil back in January and February, like we was running it all the way up. We played oil, we played steel, because like again, like if the economy is growing, people are building, housing market was going crazy, so that means flat rolled steel was going crazy. So like I'm starting to look at big macro plays and then breaking it down. So I'm like, okay, steel, oil. All right, what's the big players in those arenas? CLF, Exxon, Chevron. Okay. Then I take those charts. Well, which one of these charts do I like the best? And then from there, it's just, I check the flow. Does big money see this? Because that's the biggest thing. You can have a thought. You can look at the chart. But if the money not flowing, then it's not moving. If the money not flowing, it's not moving. So you gotta make sure that you have that backing, because you're not the major player. You're not the one that's gonna move the market. Your couple dollars is not gonna move that stock. So you got to make sure that there's some institutional money kind of coming in behind you too. And if you can have what I call the perfect storm, flow, charting, and a fundamental reason why you need to get in that play, it's just about sitting back and waiting, because the money coming, baby.
Love it.
And how much, so for people getting started, I know, looping back to the comment earlier, just as far as, the rent money thing, right? So it's how much should people have when they're first trying to get started or first trying to get, active in the market? Do you think there is, a certain number, or, should they go play with the paper money first or paper trades, or how would you suggest it?
Yeah, so I think I'm glad that you brought that paper trading up, man, because I think that's something that a lot of people just don't utilize enough. And that's because they want that instantaneous, they want that bread. They like,
I'm gonna be real with paper trading, bro. I've done it, but I feel like I do it unrealistically.
Now that's another thing, man. It's but that when you paper trade and you can hold yourself to a system and you can make yourself disciplined with money that ain't even real, think about what you can do when you actually using your real money. So that's why I tell people, that's a test. If you can't sit there and paper trade 30 to 60 days consistently doing the same system day in, day out, you're not gonna make it live trading, because it's all about consistency. And you can either build it with live money and you're losing money, or you can build it with paper money, develop a system, and then when you go live, I'm not saying you won't lose no money, but at least you have a starting spot. So I think that's the most important thing, really just trying to paper trade to make sure, is this for me? A lot of people hop in the market with some money and they realize this isn't for me once they done blown their account. I think that's a little too late, buddy. You know what I'm saying?
They don't need to be trading, they need to be investing.
You know what I'm saying? So I think that's a big thing, just taking the time to figure out is this for me? And then once it is for me, figure out what type of trader that I want to be. I think that starting process to really get started trading is about 3 to 6 months, realistically, for you to really decide, is this something I want to do? And then after you kind of decide that, while you're paper trading, you should be intentional about how do I start to fund my account. I think the biggest mistake that people do is they take a very large amount of money out of savings or whatever they have and they try to put it in the market. That's not the way to do it, because you're going to always have an emotional attachment to that money, because you took a big chunk out of it and you're putting it somewhere, instead of doing I'm putting $50 a week in this account. Through the 3 to 6 months that I'm paper trading, I'm putting $50 a week. So then all of a sudden, when you do go live, you do got an account $500, $1,000 that's sitting there that then you don't really have that attachment to. So you won't be emotionally charged when you see some red, or you won't be overly jubilant when you see some green. You'll be able to just say, okay, I've been able to build the patience to be able to watch this thing grow. Because I think the worst thing that happens to a lot of traders in the beginning is they hit a big win, 200-300%, and that just shifts their mentality. They
think they got it.
They're oh yeah, I got this. This is how it's supposed to be every day, and it's not. The slow grind is the way to do it.
I'm glad you talk about them percentages, because I wanted to talk on that some more. What is a realistic rate of return people should expect when trading? Because like you just said, somebody hit an option, they get that 300%. And now they chasing the dragon. I got to get 300% every time, or I don't win.
I think it goes back to kind of your fundamental knowledge in the market. The index gives you 8 to 10% on average a year.
Yeah.
Right? And this is how I break it down to my students. That means if you started with $1,000, at the end of the year, you should be looking at about $1,100. That's $100 in 365 days or 252 trading days. And a lot of times they're like, man, like that ain't nothing. But like that's realistic because most people don't beat the market. You're statistically not supposed to be beating the market. So like, I think that's where you start, right? Now, with trading with options, it kind of leverages up the bread, you know what I'm saying? So you could probably make a little bit more, but I always try to tell people 8 to 10% of whatever you started with in the beginning of the year is where you should expect. And know that it's not gonna be a straight up and straight down path. You might have that 1,000, you might ride it all the way up to 1,500, but it might come all the way down to 8. But no, if you done beat 1,100, you done got that extra 100, you done got your 10%. Like that's realistic. I think on a smaller basis, right? 1% a day of your account. If you can do 1%.
Health insurance plans come with deductibles and claims processes that are confusing and expensive. CrowdHealth puts you back in control of your health care. Each member gets a personal care advocate and access to thousands of other members ready to help pay for large health expenses. Visit joincrowdhealth.com and use code HEALTH to get your first 3 months for just $99 per month. That's joincrowdhealth.com, code HEALTH. CrowdHealth is not health insurance. It's a totally different way of paying for healthcare. Terms and conditions may apply.
That's good. And a lot of people are like, oh, that's not a lot of money. But like, you keep doing 1% every day.
Compound.
And compound. And then come talk to me in 365 and tell me that wasn't a lot of money. Because there's no way it's not going to be a lot of money. So I think that's good. And to kind of answer your question, $500 to $1,000, especially with option trading, is enough for you to get started.
So I'm glad you kind of talked about that. And you had mentioned earlier, you was like, the market gives you 8 to 10% on annual. So what's your views and when did you start actually long-term investing versus trading? Because you was introduced to trading first.
Yeah.
So when did you start seeing the value of actual long-term investing?
For me, I always kind of saw the value, but for me, it was about what I needed. I needed cash, I needed cash flow, I needed liquidity, right? So for my financial goals, I'm trying to run up this bag real quick so that I can kind of make my real true interest into the long term. So that was my thought. I always said I wanted to run up my trading account at 25 bands, 30 bands, and then after that start reinvesting my residual. Because what I realized is me putting that $100 here, that $200 here, like people always say it's time in the market. And it is time in the market, but you have to be like realistic. Like, is that $200 that I'm putting here the best opportunity cost for my money? And what I realized is at my age and what I was trying to do, it wasn't. Like, and I also realized where I was coming into the market. I started being a full-time day trader during the pandemic. Like, so like everything's running up. Like I'm trying to run up this bag real quick. So like now when everything's back down, I've really been buying stuff right now. Like I really didn't like. I ain't gonna lie to you. I didn't really invest any bread on the way up. I didn't really invest any bread on the way up because fundamentally I knew that this wasn't going to be sustainable. So I said, okay, let me just trade this until I feel like it's in a spot that is a little bit more sustainable. And I think we've kind of started to reach some of these levels now that are sustainable, so that I can start building that real long-term bag. So I think to kind of summarize my answer, I think you have to realize where you're at, where the market's at, and what's your goals, right? Because if I was 50, it would be a totally different story. You know what I'm saying? But because I'm young, I still have a lot of time to be in this market. And I didn't take that regular route of having a regular job, having my 401k. Like, it was always just the bread that I had. I had to make that bag a little bit bigger before I could just be saying, oh, I'm going to let this sit over here for the next 30 years. Like, you know, and that's just kind of the way that I kind of looked at it.
That's important. That's super important with, like you said, the opportunity cost of that money. Because not kind of thinking about the times we're in now. Had you been investing in certain companies, then that money would be worth less now.
It would be. There's some growth companies that are down 80, 90%.
I'm hurt by a couple of
I know. All right, we ain't gonna get. But seriously though, man, it's and again, you know, it's not about trying to time the market, but it's about trying to be informed and trying to really understand where it's at. That's why I tell people it's not about trying to rush into it. Take the time, figure out, because if you're talking about long-term investing anyway, right? You start looking at, and you look back at it, you start looking at some of those evaluations, some of those multiples, things are trading at Zoom. August 2020 was trading at 600 times its PE.
That's crazy.
600 times.
So break down PE real quick.
Price to earnings, right? So basically, how much each dollar is worth, how much a dollar of earnings is worth, right? So like, I think at that time, Zoom's PE was like I said, was like times 600, because I think they weren't even profitable at the time back then. And really what was happening is people were willing to think that we were going to constantly grow. Like that their growth, their earnings growth was going to be so spectacular because of the change of the workforce that, it can support a $600 stock price. Zoom's trading at like 120 right now. It got all the way down to $89 a couple weeks ago. Sheesh. So it's just like those valuations didn't make sense, right? You got companies that have never, another one, Rivian, popular IPO. Rivian hasn't really started to make any bread, but it IPO and it skyrocketed. Everybody just knew, it's going to be the next Tesla. Yeah. And I was just telling people, I'm like, y'all gotta, even if you say it's going to be the next Tesla, like let's look back at history. Like Tesla didn't start off like that. Like that's not how the growth of Tesla happened. Like it took time for them to get profitable and to be able to maximize margins. You're not going to tell me a new entrant into the space is going to be worth more than the top 3 legacy car makers. Like that just doesn't make sense, right? So like people, I think a lot of times what people struggle is they take a trading mentality and they try to put it in long-term investing. If you're long-term investing, you really got to look at the market in a totally different way than if you're trading.
The NBA playoffs are here, and I'm getting my bets in on FanDuel. Talk to me, Chuck GPT. What do you know?
All sorts of interesting stuff, even Charles Barkley's greatest fear.
Hey, nobody needs to know that.
New customers bet $5 and get $250 in bonus bets if you win. FanDuel, America's #1 sportsbook.
21 plus and present in Virginia. Must be first online real money wager. $5 deposit required. Bonus issued as non-withdrawable bonus bets that expires 7 days after receipt. Restrictions apply. See full terms at FanDuel.com/sportsbook. Gambling problem? Call 1-800-GAMBLER.
And I'm glad you brought up you coming into the pandemic, because that was a question that I had. How did trading change this year versus 2020 and 2021?
Yeah, so we kind of chopped it up a little bit about this earlier. So the market has gotten a lot less predictable, right? So especially, in 2020, after the flash crash, right? Once the Federal Reserve basically said, hey, we're about to support the functioning of the markets. We're about to continue to funnel money into the markets to be able to make sure they're functioning correctly. Larger money said, okay, and they cut rates. So here's what people got to realize. When the Federal Reserve cut rates almost to zero, well, they were at zero, like that basically meant like big money could borrow money for like nothing. Yeah. So it was like free money. So like they're like, we just gonna pump these assets until we can't pump them anymore. So like, you saw a lot of people in 2020, especially after the flash crash, thinking like, we're going lower, we're going back lower. And like they didn't understand the mechanics of like the market cannot go lower right now because there's too much liquidity being pumped into the market. So like that's why you just, if you look at the chart, you just see it just constantly just grinding up. So, we're coming to 2021. The Fed starts to say, hey, like, we got to kind of start to taper off this balance sheet a little bit. Like, we done put a little bit too much liquidity out here. Y'all out here going crazy with these PPP funds. Y'all out here going crazy. We thinking y'all supposed to be stimulating the economy. Y'all out here doing God knows what with this.
In Miami, twerking on boats and shit.
y'all ain't doing what we thought. So they like, okay, so they starting to give the warnings like, hey, like, coming soon. the plug got to switch up, bro. Like, you know, we can't keep giving y'all what we've been giving y'all for the price we've been giving.
The price is about to go up.
The price is about to go up. So, you know, you start to see back in like November, things started to like top out. Like that's where everything was like at its peak. And you start to see like people started to realize, okay, like 2022, money was gonna start getting more expensive. Like we need to start like taking some of these profits. People got to also realize is 2021, towards the end of 2021, those short-term gains have now flipped into long-term gains. So like a lot of the tax implications of you selling off things that you bought in March, in April, like you're not seeing the same. You might not be getting hit with that 39% at short-term gains versus the, you know, it flipping into long-term gains.
Is that what, 21%?
21%. Yeah. So like that was a major factor, right? And then, you know, what people really didn't expect was the Ukraine war, right? Like that sped up a whole lot, right? Like, you know, we started to see oil prices go through the roof. We started to see grain prices go through the roof, which is that's the kicker. Everybody talking about oil, you know, but
talking about that grain.
The commodities.
Ain't nobody talking about the grain, rice, cocoa beans. That's what you feeling. Like you feeling that oil price, but you really feeling those grain prices that were at 5-year highs for months at a time, right? So you have this dynamic where oil is more expensive, so it costs them more to get the food there. And then you can't even get the raw import of the food, the wheat, to be able to make it. So like you got to start raising the prices to be able to keep demand down, right? So you're in the beginning of 2022, you got this inflation, you got the inflation from Ukraine, you got the Fed that still has to get this money up off the books because they like, look, like we can't keep holding this. So now you're starting to see the market really start to deleverage itself real quick. You starting to see people really start to take profits. You're starting to see people trying to position themselves back into a more normally functioning market, right? So I think the biggest thing is those upward moves aren't as big as they were in 2020, 21. Before you were getting 5, 6, 7% days out of any stock across the market. Like now you might get a 2 to 3% day and it might be choppy. It might not be a straight up 3%, it might be up and down, up and down. So I think the market has gotten a lot more choppier and harder to trade. I think another thing that's happened is a lot of new entrants into the market are starting to get their first big reality check. Like, oh, this stonks just don't always go up.
Dogecoin not going to.
And then like there's always lower. I think that's one thing that, you know, people that have never experienced a bear market. I remember my first bear market in 2018. I'm like, okay, like stocks do go down and they can keep going down. Like, so I think that's what people are seeing. Like people thought, okay, 400, SPY 400 was going to be the base. And then it was SPY 380 going to be the base. And then people saw SPY 360 and they're like, okay, well, I don't know how low this thing is going anymore. So I think that's the biggest thing is, you know, people have to learn how to manage their expectations and really learn like what that looks like. And it's hard because we haven't been in a post-pandemic during a huge world war. Like we've never seen these type of conditions come at one time. So like you can't even really lean on history to know like what you're gonna do. You got the Fed saying like, we really don't know what to do because like we ain't never seen this before. So we like doing trial and error. So like if you got the Fed saying they're doing trial and error, like what do you expect that you're doing? So like it's tough right now. And I tell people if you can make it through these current market conditions right now, you're gonna be gravy. Like the people that made it through 08, 09, they lived through the biggest bull run in the next 11 years. So like it's the same thing right now. Like if you can make it through this time, have the longevity, don't try to put too much risk on, you'll be good. You'll make it.
I was just gonna say, I think just a quick like note from just your experience and what you're saying and everything. I do appreciate the fact just that economist, like that background.
Yeah.
Like I can hear it in and out. You like not a lot of people, and I meant to note that earlier. Like that's not a very popular degree, at least for like that I know of. Like everybody,
economics was hard as shit.
Yeah. Everybody,
I'm a businessman.
Economics, me
that
too.
Shit was hard as shit.
Man, I hated that class. Wanted to get past it and get through with it, bro. So like, for you to be able to take the macro as well as the micro and use both of them in your advantage to be able to figure out like, all right, cool, where are we in the market? all right, I probably shouldn't be doing a lot of long-term investing right now because the market is at an all-time high. Let me wait until things start crashing. That's going to come soon. I know this because I already understand how the economy is going to go.
Exactly.
Like, I know the cycles. I know where I'm at. So it's just like that knowledge and that background, I think that's really cool and really something to like pull from, that like you went and did the fundamental studying to get that. And I think that's really cool.
It's major, man. And I think, economics is not a popular major, right?
No.
A lot of people don't like, most people that major in economics either try to do the lawyer route or they'll go work for the Fed, right? I got a couple homies that work for the Fed, right?
With every monthly bill, like rent and car payments, you know exactly what you're getting when you pay for it. But health insurance plans feel like the total opposite. They're confusing and expensive. Then when you actually have to use your benefits, there are deductibles, claims, processes, and other red tape to deal with. But Crowd Health puts you back in control of your healthcare. Crowd Health is simple, transparent, and affordable. As a member, you'll get a personal care advocate who is with you every step of the way to help navigate the complexities of health events. They'll even negotiate bills on your behalf and could save you thousands of dollars in the process. Plus, you'll get access to thousands of other members who are ready to help pay for large health expenses. Experience healthcare freedom with Crowd Health. Visit joincrowdhealth.com and use code HEALTH to get your first 3 months for just $99 per month. That's joincrowdhealth.com, code HEALTH. Crowd Health is not health insurance. It's a totally different way of paying for healthcare. Terms and conditions may apply.
But what I think, what I try to tell people is economics is just the science of people. That's all economics is the science of people. Because before I even got into business, like when I was in high school, like I told you, I did like science fairs, national science fairs, and biotechnology. Right, I had internships at Duke University while I was in high school.
I said, "Oh, you was a smart motherfucker."
I peeped that. That was when he said that. I was like, "Oh, I see how you got into this degree."
Yeah. So I did the whole biotechnology route, and if you'd asked younger me, like I thought I was gonna get my PhD in biotechnology, right? But when I took that time, because originally, a little bit about my story, like when I graduated high school, I was a Morehead King Scholar, which is one of the oldest, most prestigious scholarships that you can get at UNC Chapel Hill. Young and dumb, lost my scholarship first semester.
You was partying
and doing just dumb shit.
I understand. I was there too, bro. I was on academic probation my first semester.
Just doing dumb stuff, man. And I think, when I lost my scholarship, I took some time off school. I didn't automatically hop back in school. I'm like, okay, apparently, like, TJ, you got something in your system that you just need to, like, get out. Yeah. You know what I'm saying? So I took probably a little bit too much time, like 2-3 years of just BSing. And then, one day I started to realize, I'm like, dang, the people I came into Carolina with, like, they about to graduate. You know what I'm saying? Like, and I'm still sitting here, like, doing the same old, like, they about to do. So I'm like, you know what? Like, I gotta regroup. Like, I gotta go home. Like, I gotta get out of this area. So I went back to Greensboro. My mom and dad are Aggies, so they kind of pulled some of their connections. I was able to talk to the chancellor. He looked at my high school record, everything I did. He said, "Okay, I'm gonna partner what you did at UNC. I'm gonna give you a chance at A&T." And so then when I got my chance at A&T, I'm like, okay, well, this biotechnology route kind of looked a little bit different, right? Because like that timeline is real long, to be able to. So I'm like, you know what? How can I switch it? Like, what's something that like would allow me to still get that passion of science and numbers, but like has a little bit faster timeline? So like I was looking around at like economics, like was the thing, because I was taking a microeconomics class at the time. And I'm like, man, I really like this, man. So I ended up like getting cool with the dean, long story short, ended up, basically doing a lot in the B school. Like I was the type of dude, like people paid me to do their homework, like accounting, all that, man. So like I just became like a student of business. I loved it so much, man. And that's really what like kind of vaulted me to kind of doing what I do now. You know what I'm saying? It's like having that passion of science, learning a social science like economics, and then figuring like how can I take this social science and really apply it to like make real bread, like. And we here.
Hey, man. That's dope. That's dope.
So I did have a question earlier that I want to get back to. It was something you mentioned with options and kind of with managing stuff there. I was wondering, what is a good timeline for options, right? Because right now we in these real choppy markets, things like that. Like, I've learned that weeklies aren't the way to go.
Yeah, no.
So, like, what is a good timeline?
He's like, hell no. Don't do that.
Yeah, because weeklies, you're asking for stress. Now, do we call out weeklies an impact? Yes, but that's because I'm
Y'all
sitting.
call them lotto picks,
but we call them lotto picks because I'm trying to let people know like the level of risk that you are taking on, because like in 2 to 3 seconds, you could go from being up 20% down 40% because of the exposure, because of how close that expiration date is. So what I tell people is, be okay with buying a little time in your contracts, right? Like, be okay with having to move, take a little bit more time, especially when the markets are choppy, right? Because let's say, for instance, you buy an option, market opens tomorrow. Let's say I buy an option on Monday, right? And it expires on Friday. Unless I'm expecting that move to happen like really, really quickly, the longer that I hold it, like the more value that's just draining out of that contract. And then if I gotta also think about like the price moving against me and I'm losing money for just holding it, like I'd rather just go 60 days out, 90 days out, especially if you're newer, because that's at least gonna give you time to manage the position. Because I think that's the hardest thing that for newer traders is like the market moves fast. And if you're not used to those weeklies moving 15, 20% every 2-3 minutes, like you're not used to kind of getting out of those. But those longer dated contracts, they're not gonna move as fast. So that's gonna allow you to be able to learn how to manage that risk, learn how to know where to take profits and everything. I think the other thing is, take profit when you see profit. We say that in Impact all the time. Take profit when you see profit, especially if you're working with weeklies, because that first move is typically going to be your best move. Because even if the stock price gets back to where it was when you was at the profit that you were at, more than likely it's not going to be worth the same.
Because it took so much time.
Because it took some time to get there. So that's why, the thing is that let's say you in a position and you hit that profit and you want to stay in that position, you can roll. What you can do is called rolling the position. You can roll it out to a later date. Robinhood actually just gave people.
So explain what that mean.
Yeah. So basically, what rolling is they're taking the value in the current option contract and shifting it to the option contract that you have decided, right? And you can either decide to add more money to that shift, or you can actually get a credit back from that shift. So let's say for instance, I'm looking at Apple. That's crazy. So let's say I'm looking at Apple, right? And let's say I grab Apple 145 calls, right? Let's say they expire Friday. Get in on Monday, we up 30%, but I think Apple are gonna run to 150. So what I'm gonna do is I'm gonna take these Apple 145s for this week, and I'm gonna roll those Apple 145s maybe to a month out to Apple 155s. The thing about rolling is you can choose what contract you want to roll to, and you know what the value of that contract is. So you can have a 1-for-1 roll, right? You cannot put any more bread into it and roll it out to another expiration, higher strike, lower strike. Or you can say, I want to increase my exposure. Maybe you went kind of light, so you want to take that 30% profit that you got, roll it into another week, and you want to add $100, you want to add a couple contracts, you can do that too. But by rolling it, basically what you're able to do is to take that value in the current contract, whatever it is, and shift it over to another contract without actually having to move any additional cash. So it's a lot of times that's major. And the thing is, Robinhood used to not let you roll contracts.
Thinkorswim did, though.
Yeah, Thinkorswim did, but Robinhood did not. Robinhood actually recently just added that feature to be able to roll. Now, Thinkorswim is still better because with Thinkorswim, you can roll to the opposite side. Now,
so
that's
you
the
can do
things I'm
from
gonna
a
be
call.
calling out.
You talking about a call to a put?
Yeah. So like there be
wow.
some moves I'll be making in the group that I can't always call out because they're moving so fast. But I could be in let's say I'm in the Apple 145 call and I'm up 30%, and I see that I'm up that 30%, and I think it's about to drop. I can roll it to some Apple 140 puts in the same trade, like right then and there. I could roll that. Wow. You know what I'm saying? I could roll it and then close it out if I decide.
You can ride the wave both ways. Both ways. Once you see it go up and you up 30%, naturally you know that the market don't always go up.
So so sometimes, and especially when you're working in like cash accounts, Because with cash accounts, you can only trade up to the value of cash that you had that day. So sometimes, like, if you sell that contract, you might not have the actual bread to be able to go buy another contract to the opposite side. But if you roll the value that's already in that contract to the opposite side, you didn't actually have to. You didn't actually have to have the bread there, because when you close it out, you gotta wait till the next day for that bread to show up. But when you roll it out, it's basically like the brokerage is saying, all right, we're gonna give you a credit because we know the bread is there. It might not have cleared yet, but we know we're gonna get that bread, so we're gonna let you roll it. And like, that's where like some of the real big money, like that's what they do. Like they'll buy something right there at the money, and they'll just roll it up until they get to their profits. Because what we do as retail traders, we say, something might be trading at 180, and we think it's going to 190, so we're gonna try to go as far out the money as possible to get the cheapest contract as possible, because we think that's where the value is going to go. But a lot of institutional traders, they're going to go right there at the money. They're going to take that 181, 182
and
call.
Just to clarify, when you say at the money, say like it's the contract I'm buying is at 185 and the stock is at 184.50.
Yep. So at the money contracts are always the strikes that are closest to the current share price, right? So a lot of times what big traders are doing, they're buying at the money, and if the trade is performing, they're just gonna roll it up. They're gonna roll it up, and they're gonna roll it up and while they're rolling it up, they could be decreasing their exposure as well. You don't have to roll the same number of contracts. You could bought 10, right, and then decided when I roll up to the next strike, I might only want 5. So then TOS is gonna give you the difference of that 5 in your account, and you're gonna have the other 5 that's moving that's rolled up to the next contract. So like man, options are some of the best financial tools that you can use when you really know all the things that you can do with it. Because a lot of times we only play the buy side. Like I said, we only play the buy side, but like there's a whole other side of the sell side of options that like that type of paper is crazy on the sell side.
Especially in this market.
Oh man. Like one of the easy, I'm gonna give y'all some game. One of the easiest strategies that you can have, especially for some of these growth names that a lot of people have bought into, that they have 100 shares or so or something, sell cover calls on those shares. Like if you got 100 shares or something, you can sell calls 2-3 strikes out the money. So what I mean by selling calls is that you are actually receiving a premium for putting that contract in the market. And what this allows you to do is passively earn on those shares. Worst case scenario is you get exercise. That means that the price goes above what you were selling your calls for, and that means you have to sell your position. But
you still get the money.
But you still get the money for selling your shares. So it's like that's clutch. Like, you know what I'm saying? Like, how is that a lose-lose? Like, so one of my strategies right now is like, like some of these cheap names, I might not even really believe so much in the company, but if I know it's a hype name that has a high IV and these contracts out the money are really elevated, I'll grab 100 shares of it and just constantly sell calls on it. In a year, I'll recoup my whole bread off of the 100 shares that I bought.
Just on the premium.
Just off of collecting premium. Now, if I was really getting freaky with it, I'll take the bread and keep reinvesting it and grab me another 100 shares and reflip it and do it again, man. And then you can take all that bread and then actually go buy some shares of a company that you like. You know, so like you might not have the money, but in the market you can be creative. Like you can and that's the thing I love about options. Like you can create different strategies in options to fund contracts that you can't afford to pay for. You can sell some contract, you can sell calls, you can sell puts and buy calls, right? Or you can sell calls and buy puts, and depending on the difference in premium, that can help you burden some of that bread that you would have had to put out if you would have bought just straight puts, or if you'd have just bought straight calls. So like it's a way. It's just the surface, man. I'm 4 years in the game, and I'm still scratching the surface, man. Because it's so many ways that you can get creative with options trading, man.
Is that where you would suggest somebody to start?
I would suggest people to start with market mechanics, just in general, because an option is a derivative. It's based off the market. So if you don't know how the market moves, there's no way that you're going to be able to understand how the options are moving. So I always tell people to spend that time understand how the market moves, understand why certain things are moving the way they do. Then take your time in the options. Not saying you got to day trade stocks because you need a whole lot of money to day trade stocks, but just understand why things are moving the way they are so that you can maximize that in options trading for sure.
So there was something else that you said earlier about the tax advantages and stuff like that. So I kind of want to talk about the tax implications for whenever you're trading and how to set yourself up so you're not, really hit too hard. Because that's something that I've heard, that's why a lot of traders do lose is because they got to pay so much for taxes. Yeah. So how do you mitigate those tax risks on that side whenever you're trading full time?
Yeah, so there are a couple things. You can get a preferred trader status.
I switched to Boost Mobile and got a free Samsung Galaxy A23 5G phone. Want to know the best part?
It was free?
Nope.
The fact that it's on America's largest 5G networks?
Nope. It's the ding.
Oh yeah, love the ding.
Right? It's all about the ding. It's the dingarooski, the dingaroner, the ring-a-ding-ding.
Unleash your power to save with Boost. Get a free Samsung Galaxy A23 5G phone when you switch. Boost Mobile. Unleash your power.
And the ding.
Limited time offer. New customers only. Available on select networks. 5G not available everywhere. One device per line. Tax excluded. Additional restrictions apply. See your local Boost Mobile store for details.
So as a preferred trader status, which is something I'm in the process of trying to do, once you actually get that status, that tax status, because normally you're maxed at $3,000,
of
losses, right? You can whatever your gains are, but losses. But the preferred tax status actually allows you to claim all of your losses as if you were that's your income. So
what?
Right? When I figured that out, I'm like, bruh, ain't no way you can make $100,000 and then only be able to
lose three.
I'm like, this is backwards. It got to be. So I'm looking at the code. I'm looking at the text. I'm like, bro, because I know it's big money. I'm like, I know they claiming more than that. So I'm like, oh, okay. Preferred trader status. So it's like once you be able to, I think you have to show that you are full time. I'll forget the actual game requirement. I want to say it's 150, but basically you are able to prove that you're a full-time trader, that this is how you're actually paying, this is actually your actual income. Yeah, you'll be able to take all your capital gains off. So this is where wash trading comes into play, right? Towards the end of the year, right? When you're in a position, you're losing on that position. And you're like, but I've had a good year. So what the wash rule is, you have to wait 30 days between selling the stock and buying it back to be able to kind of claim those capital losses, right? If that's what you're trying to do. So a lot of times you'll see at the end of the year that individuals will be like, oh, I'm already losing on this position.
This episode is brought to you by LifeLock. It's tax season, and we're all a bit tired of numbers. But here's one you need to hear. $16.5 billion. That's how much the IRS flagged for possible identity fraud last year. Now here's a good number. 100 million. That's how many data points LifeLock monitors every second. If your identity is stolen, they'll fix it. Guaranteed. Save up to 40% your first year at LifeLock.com/podcast. Terms apply.
And I think it might be going lower. I'm going to sell right here and buy it back in 30 days or so I can take off the capital losses of me holding that position.
Still get the asset for
but then I'm still gonna cop it back because I still like the company, but I need to offset some of these capital gains that I had. So I'm gonna sell it at a loss right now. You know what I'm saying? Just to buy it back 30 days later. So you'll see that. Watch around October, November at the end of the year. You'll hear people watch trading. They're just, it's not the fact that they don't believe in the company. They just realize, hey, I made some good money this year. I need to offset some of this. And unrealized capital gains, unrealized capital losses, they don't do nothing. They don't do nothing for you. You need realized. So they sell it, they take that capital loss, they report it, and then they buy it back. And then another thing is trading under the LLC, right? Establishing, as most people know, LLC is just an entity. You can open up trading accounts in your business name, right? So then opening up a trading account in the business name, well, the trading income is still regular income, right? But you can then write off any other business expense that comes along with you running that LLC, whether that's your computers, whether that's your trading softwares, whether that's your impact investment subscription. You know, you can you can plug all of that. You can plug all of that in to be able to offset some of that taxable, some of those taxable incomes. And if it's an LLC, you can do charity. There's a lot of ways you can finesse the taxing. So that's another thing. If you're serious about trading, create an LLC, trade under the LLC. I think between the preferred trader status and trading under LLC are two major ways that you can really kind of lower that tax burden, and just be intentional. Just don't be like Machine Gun Kelly out there, like just shooting at everything, because like at some point, like all games ain't good games. Know where you at in your taxable income for that year, because if you sitting on that bracket where you about to move from here to there,
because them percentages matter.
Tell me about it, but you about to move from here to there. Oh well, maybe TJ done with trading for the rest of the year. If I'm at the end of November and I'm like, oh, I could be paying from 21 to 24 or 24 to 27. Oh, we about to chill. There ain't no reason, because what you're about to do is put yourself in a worse situation, because now you about to get taxed more bread on you not really making a whole lot more, but that tax is gonna feel like a whole lot more, and especially with trading, because you're not paying taxes throughout the year. You know what I'm saying?
It's coming out.
You with that final number.
Oh boy, I learned the hard way. First year of the pandemic, I'm looking at these capital gains. I'm like, oh, this was good, but where's the money? How am I supposed to pay all this money back? And I realized, I'm like, man, like, you really got to be intentional about, like, you have a good week, you made 10 bands that week, put two bands aside. Like, seriously, because here's the thing. You're going to get taxed on that bread regardless. You know what I'm saying? You're going to get taxed on that 10 bands. You might have spent that 10 bands, but that don't mean that tax money.
That don't mean Uncle Sam coming around
I need that. So, like, I also, you know, tell people that are, you know, actively trading that's making good money, like, pay your taxes quarterly. Like, it makes it a whole lot easier to pay them quarterly than trying to come at the end of the year and pay them taxes. So,
Gotcha. So we're going to get into the last parts of the podcast. So I got 3 questions for you. This is something new that I've been coming up with.
Okay.
So the first question I got is, are you frugal or are you a flexer?
I would say this. I'm a frugal flexer.
Explain that.
I'm a frugal flexer because, like, I'm the type of guy, like, do I like to flex? Like, you know what I'm saying? Like, if we going out, do I like to get the table and the bottles and stuff? Like, yeah, but I'm not getting the most expensive bottle on the list. You know what I'm saying? Like, if I go out and we shopping, like, you know what I'm saying? Like, I'm not gonna go to designer lane and spend all my bread. You know what I'm saying? I'm gonna take some time to identify 1 or 2 things that I want that they're gonna be nice, but, like, I'm not spending everything just to prove to people that, like, I got it. Like, because I feel like the way that you prove to somebody that you got it is the fact that you don't need it. You know, like that's when you know you got it. Like, and people always say, look at Bill Gates, look at blah blah. They don't wear this, that, and the third. I'm not really like that. I'm not gonna be like the person that has a whole lot of money and don't dress like I got money. I'm gonna dress like I got some money, but I don't feel like you got to put, you know, your whole arm and leg into your wardrobe. You shouldn't
be buying shit that's gonna put you in a bad situation.
Yeah, like, you know what I'm saying? Because my thing is, and another way I say I'm a frugal flexer, things that I do flex on, appreciate. Like my gold and silver, like, collection. I got a coin right now that's 1 of 100. Right, it's a kilo of silver. Like, I paid a good amount of bread for that. You know what I'm saying? I like to flex that, but that's also like a frugal flex, because it's like that thing is going to constantly, like, be appreciated in value. Like, it's different than I could have bought a Gucci belt that, like, you know, the moment I wore it, like, it lost 30% of its value. Like, that coin it's going to constantly continue to appreciate. So I like to flex in assets. Let's just say that. I like to flex with assets.
I fuck with that. So, second question. How are you building wealth for you and your future?
Yeah, so of course, you know, establishing, you know, a solid dividend portfolio is important. I'm really trying to establish what I call my cash flow machine. So I'm trying to set up a monthly dividend portfolio that will start to pay out into a trust that would then I can leverage through banking to be able to secure very large kind of real estate deals. So that's kind of like the long-term goal. So like I probably won't be able to really see the fruition of the larger real estate deals that I'm thinking of, but like I'm going to have that dividend portfolio that's constantly building so that like when that next generation comes along, it's like y'all not worried about getting the capital together. I got the capital. Like y'all worry about the next part of the plan, like let's execute. Because I really feel like real estate, regardless of, where it's at, real estate is the easiest way to keep wealth and appreciate wealth. And this is coming from a stock guy. Like I love stocks to death, but you're not getting that same ROI from stocks as you are from real estate. And you're not able to leverage stocks like you can leverage real estate. You can have a $10 million stock portfolio. You take it to the bank, and you try to get a loan off that stock portfolio, they not giving you that loan to value percentage that you're looking for. You take that real estate and you try to get a loan off that. Easy. They like, oh yeah, we want all that. We want all that. So I think I'm trying to build this stock, use my stock knowledge so that I can kind of really make some real estate moves down the line.
That's a bet. Okay, so my last question is, do you have a life insurance policy?
I do. So funny enough, my cousin he was trying to sell me life insurance for a really long time. And I ain't really ever, I'm like, bro, I'm young, I don't need life insurance. But then when he started telling me about the IUL and the fact that I could start he started talking my language. Yeah. I'm like, oh, wait a minute. You telling me I can put money here and then pull the money and the money's still there? I'm like, okay. And then I can take that money and go get this and go get that, and it's still appreciating the whole time. Like, yeah, I like that. So like, I had to go see what that was about.
So let's see what that's talking about.
Yeah,
shout out to your cousin for understanding his customer.
Yeah, man, because that was cool, man. And I'm like, that's something I had never heard. It was like the best kept secret. And I was talking to all my rich homies. I'm like, y'all been doing this for a while, ain't you? Y'all ain't want to tell me about it. But it's cool. So yeah, man, if you don't have a life insurance policy, go get one.
Need that. It's a necessity. If you listen to our podcast, you don't have life insurance, you need to smack yourself. Yeah. 2 times.
Come to Dallas, I'll do it for you.
All right, TJ, so I have one question for you as well. What's a personal finance tip or principle that you live by that you want to share with our audience?
I got to give y'all the rule of 33. I got to give you the rule of 33. And this is just how I try to break up my time in life. So 33% of my time I spend helping individuals. 33% of my time I spend appreciating the moment. And 33% of my time I use to gain more information. And this is so I can always stay in equilibrium. And I use a cup analogy. If you look at yourself as a cup, if you're constantly pouring information into yourself, like you can only fill up that cup but so much before it starts to overfill and you're losing that information. So you constantly kind of have to pour in and pour out. Well, my pouring out is helping people kind of passing that knowledge that I'm gaining from those that I want to be like to help people who want to be like me get there. And then that other 33% of like appreciating the moment is like, we in society, we always feel like we got to grow, but like we're not a machine. Like, we got to take a break. We got to recharge. You got to be able to appreciate where you're at in that very moment. So I think that's something that I do struggle with. And we talked about that earlier, but like having my friends and family to say, hey, like smell your flowers while you can still smell them is important. And it constantly keeps me in balance and equilibrium, and it makes sure that, and I know when I'm out, like I know when I'm burnt out, I know when I'm trying to grab too much information, or I know when I'm trying to pour out too much. So like it just helps me kind of stay in balance so that I can constantly have sustainable growth. Because the worst thing you can do to yourself is have unsustainable growth to where you are running at 150%, but then you got to go at 0. I'm constantly going to give you that 80 to 90%, but I can sustain that forever, and that's just the kind of the way that I look at it. People say, oh, like, you're not giving 100% all the time? No, I'm not giving 100% all the time, but what I am giving you is I know it won't waver. What you get from me today is the same thing you can expect from me tomorrow, same thing you can expect me from a year from now, same thing you can expect from me 5 years from now, because I know that's what my equilibrium point is. And a lot of people think that equilibrium is at 100, but most of the time it's not. You know what I'm saying? It's not at 100. You got to figure out where you operate the best and operate there.
That's deep, dog.
Man,
I appreciate that.
It's a good game, bro. This has been a dope ass episode.
Yeah, man, I enjoyed it, dog.
I'm happy that you came out to Dallas.
Man, I'm happy I came out here too.
So,
real shit.
TJ.
So TJ, brother, again, want to say thank you for being on the podcast with us. For people that's looking to get tapped in with you, they want to follow you on social media. They hearing all this knowledge from the stock market. They're like, bro, I need to be in this group. Like, how can they get involved with Impact? How they can follow you?
Most definitely. So you can follow us at Impact Invest on Twitter, IG. You can follow me personally on Twitter and IG, TJ the Trader. And I'm constantly, dropping game. I do consultations. And I'm really trying to look for serious individuals. So if you're serious about trying to change your life, trying to level up financially, learn a little bit more about the stock market, tap in with me, tap in with Impact Investments. We're here to help.
Appreciate that.
Appreciate y'all boys.
No problem. So we'll get into a few house cleaning notes before we get up out of here. Once again, we want to say thank you to everybody who taps into us week in, week out. If you're listening on any audio platform, please leave us that 5-star rating. I need a review. Let us know what you think about it. Let us know what you're thinking about the episodes. Let us know if you want to hear from somebody. If there's somebody that you know that's doing something great in the community, they're doing something impactful, tell us who it is so we can try to get them on for you.
Shoot that info over to podcast@blackwealthrenaissance.com.
Yes, sir. And also, if you're watching on YouTube, I need you to hit that little noti bell. I need you to subscribe. And I need you to also comment on the video. Let us know what you're thinking. And I appreciate y'all for that. That's all I got. What y'all got, fellas?
Shit. It's Stack Summer, baby. I'm going to be on
Yes,
y'all
sir.
ass all summer. We trying to save money this summer. It's getting bad outside, and it's time to be in the house and get your paper right so that whenever everything finally do bottom out, you in a position to put yourself to buy these assets for cheap so that you can start seeing that appreciation. So Stack Summer is our initiative this summer. We inside all summer, baby.
Hell
we
yeah.
waking up, we focusing on our health, our wealth, and our mission. That's it. So if you want to join the Stack Summer Challenge, you just got to text the word STACK to 337-455-7778, and you're gonna get some updates from us weekly, daily. We're gonna hold you accountable for what your stack goal is. My personal stack goal is 5,000. Jalen's is 10. I don't know. You got a stack goal this summer? What's the
Nah, I ain't made one yet.
We gonna stack it. We gonna get it.
We gonna get this shit together.
Y'all join. That's all I gotta say.
Hey man, they basically wrapped it all up. I ain't got nothing to add, man. I just appreciate this episode. It was really dope, and y'all go hit up Impact Investments, go learn how to trade some stocks.
Well, until next time, y'all. This is Black Wealth Renaissance signing out. Peace.
McDonald's has entered a Minecraft movie universe, and Grimace, Birdie, and Hamburglar just spawned as new collectibles in the overworld. Now for a limited time, you can get one of 6 McDonald's collectibles when you order a Minecraft movie meal. With your choice of Big Mac or 10-piece chicken McNuggets with spicy nether flame sauce. Available now in a biome near you. Oh, and at your local McDonald's.
At participating McDonald's for a limited time. A Minecraft movie only in theaters.